Good morning. Welcome to Stock Market Today. It is Thursday, January 14th, 2021. This is your host, Dan Russo, the Chief Market Strategist at Shaken Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Shaken Analytics. Head over to shakenanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. U.S. equities were mixed in Wednesday's trading, with growth and momentum outperforming value and cyclicals. At the sector level, utilities, REITs, and tech were your leaders, while materials, industrials, and energy took a bit of a break. Treasuries rallied with a bull flattening move, helped by a solid 30-year bond auction. Dollar was better on the major crosses. Gold finished up 60 basis points. WTI crude was down a like amount, 60 basis points, breaking a six-day streak of gains. So we get to the desk this morning. Futures are mixed. S&P futures are higher. NAS futures were lower last I checked, after Asian markets were mostly higher overnight, with Japan up 1.5%. China did end lower on the day, though. European markets are seeing solid gains. Treasuries are weaker, with the curve steepening amid the latest fiscal stimulus headlines. We are going to hear from President-elect Biden this evening here in the U.S. on his plan. Dollar is better against the yen, little changed against the euro. Gold down 80 bips. WTI crude is flat. As we start off our Thursday breath day, breath is bullish. But before we get into that, let's get into our major averages. Churning action, but the song, I wish I could update this slide. I really do. I really want to update this slide. I'm not going to, because I can't. The facts don't warrant it. But this is good if you're bullish, right? Remember the quote in Reminiscence of a Stock Operator? It was never my thinking that got me paid. It was my waiting, my sitting. Right? That's kind of what you're doing here if you're a bullish investor. If you're bullish, you have your ideas, you've identified the themes and the sectors and the areas of the market that are outperforming, and you've invested in that way. And you've picked, whether it's picking stocks or picking ETFs, commodities, whatever it is. If those trends remain in place, which largely they have, you just sit there and ride them, right? No need to, you don't have to be doing something all the time, right? There's this fidgetiness out there. I feel like you should be tweaking your positions, trimming here, tucking there. I don't know. But I want to update this. I really do. But it's not what the market calls for. The market calls for riding your trends. It's funny. I mean, I pull up my list of ideas and my portfolio, and I just look at where my stocks are trading relative to their stops, and they're all still above their stops, and there's just kind of nothing to do. Do some reading, do some research, look for ideas, talk to clients, but messing around inside the portfolio is not something I'm spending a lot of time doing, largely because of this slide right here. Support 360, then 340 for the S&P, 300, then 260 for the Qs, 190, and then that 160, 170 range for the IWM. The trend is up until proven otherwise. I wish I could say more. I really do. I like the action. I like talking about different moves throughout days, but at the same time, the bullish call loves this trend. Can't argue with it. It's there. Choppy trade in the near term continues ahead of earnings season. Builders are losing a leadership position. All right, so maybe some shifts under the surface. All right, we'll talk about that a little bit later on. Banks are overbought ahead of their reports. Earnings season kicks off tomorrow. We're going to hear from the big banks. Citi, JPM, and Wells Fargo going to get us started tomorrow morning. Breadth remains sort of supportive of the bullish trend. And as I said, futures point to a mixed open here today. Now let's hit the power bars for the major indices. Still solid. From a ratio perspective, solidly bullish. These are not solid if you're a bear. Dow lost 5 basis points yesterday, 6-2 bulls to bears. There are bears out there, dogmatic ones. I was reading a blog post from somebody recently who, in his blog post, admitted that he's been bearish since 2009. That's frightening, but okay. S&P 500 adds 25 basis points, 127 to 53 bulls to bears there. NASDAQ up 68 bips, 20 to 15 bulls to bears. Just solid small cap ratio. Although small caps, took a little bit of a pause yesterday. They're entitled, right? They've been sprinting laps around the competition. Just pause to catch its breath a bit. Bonds uptick, utilities best sector. Don't love to see that, but okay, they've been complete dogs. If you remember my charts, on Tuesdays of the defensive groups and how massively they've been underperforming. And, I mean, some of these are at, 5 and 10-year lows. They can bounce now and then. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Let's talk about our stocks of the day. Sticking with our theme here of Tuesdays giving you a bullish screen and Thursdays giving you a bearish screen. A little something for everybody. The bearish screen these days is more like what to avoid, where if you own a name, why do you own it? You should always be questioning. I think it's interesting. Why do I own this name? Why? I think that's something you can spend a lot of time doing. Why do I own this? Especially if you have a name that's underperforming in the portfolio in an up tape. Why do I own this name? So what I did here today was I used the Russell 3000 as a starting universe, and I screened for bearish and very bearish stocks here within our model. And then with earnings season started, I screened for the names that within one of their factors. Remember, we have 20 factors that go into this rating. One of the factors being earnings consistency. How good of a job does the company do of meeting or exceeding the expectations set for it, or that they help set? Remember, guidance helps set analyst estimates, which then companies try to beat. Well, that's earnings consistency, and investors tend to reward companies that do what they say. When they say, hey, we're going to earn 5 cents a share in the quarter, earn 5 cents or more. Otherwise, the market is going to question your credibility as a manager, right? So bearish earnings consistency is something I look for. And then the technical factors that I always like: weak money flow, weak relative strength, returns a screen of 32 stocks that perhaps maybe you want to avoid. Or if you own them, ask yourself, why do I own these? Take a look at this, screenshot it. If you own any of these names, start to have that conversation in your head. Why do I own these names? Always good to keep yourself honest. Let's look at the sector tracker now, the movement of the major sectors over the last 5 days of trading. Energy, top of the list. We'll touch on that a little bit later on. Discretionary, fins, tech, right? A lot of green on the screen here with staples and comms at the bottom of the list. Comms, still digesting the hit that big names like Facebook and Twitter took earlier in the week. So fine. Interesting to me that comms are, look at XLC on a relative basis. I was thinking about including it here, but the builders look more interesting actually. But XLC on a relative basis starting to break down. Staples, your defensive group, breaking down, just continuing to underperform. So I think it's a decent board. I'm still not struggling. You're still getting used to seeing energy with the green. But here it is. Let's look at our industry in focus. Oil and gas services, XES. Past 6 months, it's outperformed the S&P by 53%. 8-0 bulls to bears gives us a very strong ratio. Number 5 of 21 subsectors, and it's moved up 1 slot over the past week. NOV, National Oil Well, Varco, Select Energy, WTTR, and Next Tier Oil Field Solutions, NEX, with very bullish, and bullish ratings respectively, as we watch XES begin to clear that June high. Now it is overbought. So what do we have here? We had the personality change, now an outperformer. Rating change, very bullish. Money flow, bullish. Strong trend above the trend. Like, the facts have changed, folks. The facts have changed, right? The dogma, right? The person who's been bearish since 2009, that's just horrible, right? I mean, that's dogma. That's not being intellectually honest. That's letting your biases get in the way of sound decision making. How many times have you listened to this show and heard me talk about how awful energy looked for the past 2 years, right? And the evidence is still there. You look at all the red on this side of the screen, right? but the facts have changed now. So you change your mind. If you can't change your mind, you're not going to be a good investor. You're just not. You might as well give your money to a pro and find something else to do with your time. You have to be able to change your mind in this game. And we did, with the help of a quantitative model that takes our biases and what we think out of the equation. Let's look at what's trending now. We'll run through this one quickly. Intel CEO change, now multiple upgrades today. Remember, Dan Loeb is in there as the activist. COO trading higher after presenting at the JP Morgan Healthcare Conference. WELL up 4.5%, Whirlpool up 4%, no real news there. SPG higher with mall REITs yesterday. Loser side of the board, FTI CFO stepping down, stock trades lower, gap, nothing company specific, down 4.5%. DOE data hurts MRO as well as National Oil will Varco, but MRO caught an upgrade today. Rollins, ROL, no real company specific news there. Let's dive in. Builders lagging. XHB was a darling coming out of the COVID bottom, right? Everybody was leaving the city, moving to the burbs, buying new houses, fixing up those houses. XHB, which looks not just at the builders, but at the builder supply chain as well. You see names like Whirlpool, Home Depot, and Lowe's in there. Neutral rating here at Chaikin Analytics. Now, the trend is still up on an absolute basis. What I'm interested in and what's jumping out at me is the change on a relative basis. They were leadership and now they're not. Now they're, at best, we'll call them an inline performer, but potentially starting to lag. So what we're watching is, does the group get back to a leadership position? I don't know, right? It's up. So if you own XHB, you're making money. Traded a 52-week high yesterday, but you could be making more money somewhere else is the point here. And we would love to see the builders start to outperform again, because there's a lot of interesting names there and there's a lot of opportunity, whether it's pure builders, whether it's names like Whirlpool or Mohawk, or, whether it's the retailers like Home Depot and Lowe's. There's a lot of opportunity within the space, but we don't want underperformers. So something to keep in mind jumped off the screen at me today. Banks are overbought into their prints. Remember I said JP Morgan, Citi, and Wells are going to kick us off tomorrow, kick off earnings season. Take a look at the regional banks here. KRE, the big banks report, but KRE is a little bit more of the beta and jumped out at me. Look at the overbought. Look at the RSI. Now, the trend is up. It's not to say that there's anything wrong here. It's just kind of interesting to me. Remember, we were bearish on banks for a long time on a relative basis, and we changed our tune there as well. So these are the regional banks. The mega cap banks are also overbought, but take a look at what's going on, because you're going to start to hear from the banks. We've been talking about them, so I think it's only fair to keep them front and center in light of what's going on with this overbought, oversold condition, or overbought. But still very much a good trend. Now we want to hear, remember, markets are discounting mechanisms, right? So now we want to hear good news and we want to hear the guidance coming out of the banks. I think if you have time, you probably want to, take part of your morning tomorrow and listen to what Jamie Dimon has to say on the JP Morgan conference call. And then finally, we'll end it with breadth, right? Breadth is still solid. I mean, I can just kind of put this one's very much the same as last week, right? Healthy majority of stocks in long-term, intermediate term, and short-term uptrends. All the while, the advanced decline line is trading near all-time highs. Remember, the AD line broke out. S&P 500 quickly followed suit with confirmation from a trend perspective across timeframes. That's what you want to see if you're a bull. So just kind of staying the course, riding the wave. Happy Thursday, everyone. Take us for a test drive, ChaikinAnalytics.com/test drive. I'll be back tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.